Ever since ancient times, the ownership of land has always been a primary focus of the ruling class and the wealthy. Throughout millenniums, land equaled wealth, and the more land one owned, the more wealthy he generally was. Fast forward to today, the ownership of land, especially farmland, is gaining once again a lot of attention from the smart money and the ultra-rich. Billionaires and institutional investors have been buying up a lot of farmland in the US. Investment funds, for example, have amassed over 1 million acres of farmland, out of the US estimated total of around 900 million acres. Also, a lot of billionaires were drawing the attention of the media for buying up vast areas of farmland. In 2020, for example, Gates made headlines for becoming the largest private farmland owner in the US, as he had accumulated more than 269,000 acres. Other billionaires, including Amazon's Jeff Bezos and a few others, are also on the list of the most owners of farmland in the US. According to a 2021 estimate by the Department of Agriculture, about 30% of all American farmland is owned by non-farmers. Even foreign entities have been showing a lot of interest in this investment. In 2022, for example, their buying of land grew by more than 8%. So obviously, there seems to be an increasing trend and a growing interest in investing and buying up vast areas of farmland by some institutional investors as well as billionaires. But what are the main financial reasons behind this? And how profitable is it actually to own farmland? Also, what are some of the advantages and disadvantages of such an investment? But before we continue with answering these questions, make sure to click the subscribe button below if you haven't already. Now, if we take a look at the prices of farmland over the last few years, we can see some clues. Ever since 1970, the price of 1 acre of farmland in the US has gone up from $196 to $4,080 in 2023, which is the highest price up until this point. In some states, the average price could be lower or higher than the average of $4,000, depending on various factors, including, of course, the location of the land. This increase in value is only related to the value of the land, without any consideration of the increasing yield returns when it comes to what the land actually produces. Because as we all witnessed, the prices of produce and food have gone up significantly in the last few years due to inflation. However, food prices specifically in general have outpaced inflation. For example, the prices of wheat and most other crops saw a significant increase in 2022. Also, in addition to the prices of eggs, which went up by 70%, causing what's so-called eggflation. Now, part of the reason why this inflation occurred globally in the first place was due to the war in Ukraine and the whole geopolitical situation, but also mainly due to the unprecedented printing of money, which occurred in 2020, where trillions of dollars were created. But generally speaking, during turbulent times and bad economic conditions, such as recessions or even depressions, the true value of tangible assets like farmland usually rises significantly, while most other assets suffer. So while a lot of investors are focused on volatile and less stable assets, such as stocks and cryptocurrencies, billionaires and some money managers are shifting their focus towards what actually is important and has always been, and that is farmland. There are also other advantages that are unique to this investment. Some of them are that such an investment could be a hedge against inflation because of the appreciation in the value of the land, and also the ability to gain higher returns on crop yields when the overall costs rise during inflationary periods. Also, investing in agricultural land could offer a lot of tax benefits similar to investing in real estate when it comes to depreciation and amortization, which can help reduce tax liabilities. Another advantage is that the farmland itself could also be leased or rented to other farmers, where an investor could generate a steady monthly income instead of working on the land, which is also another added benefit. Moreover, the need for people to eat is independent of any market conditions. Whether the economy is doing well, or in a recession or a depression, the demand for food will always remain relatively the same. So there are several advantages to investing in this specific asset, which in turn is attracting billionaires and other wealthy investors. Even arguably one of the best investors in the world, Warren Buffett, endorses investing in farmland, and he himself bought a 400-acre farm back in the 1980s.
Well, the whole idea of investment is to lay out money to get more money back later on, right? And if you buy a farm, or you buy an apartment house, or you buy into a business, either one you own directly or one you own a piece of through stocks, you are buying into an asset that you expect to produce something later on. Now, if I buy a farm like I did 25 years ago in Nebraska, I bought a farm, 400 acres. I paid close to $700 an acre for it, and I looked to see how much it would get an estimate of how much corn it would produce per acre, how many soybeans, what I'd have to pay the tenant farmer, what the taxes would be, and I made an estimate of the income that I would receive from that farm. I didn't go out and get a quote on it, you know. I didn't turn on the farm channel, you know, every day to see whether it was raining or something, and whether it was good for my farm. Instead, I looked at the farm itself as to what it would produce. That's what I do in terms of stocks. Now, there are other kinds of assets that don't produce anything, but you count on them becoming more attractive to people next year or the year after. You're looking to the price change rather than the output of the investment. That's a whole different game. I mean, if you buy, we'll say, art as an investment, and you pay $20 million for some painting, you don't look for the painting to produce anything. If you're looking at it as an investment, you just hope somebody else will like that painting even more a year from now or 2 years from now.
Now, some people might also argue that there are a few disadvantages to investing in farmland. These disadvantages could be environmental issues like droughts and floods, volatility in commodity prices, changing regulations, and sometimes the need to be actively managing this investment, which could hold true to a large extent. However, one additional and unique advantage of investing in farmland specifically is the ability to enjoy this asset, unlike when it comes to investing in stocks or most other investments, which is a huge benefit in and of itself. Now, while farmland is traditionally owned by farmers, today there are many new investment methods that allow investing in such an asset more accessible to regular investors. These investment methods range from buying an ETF that is an agriculture ETF, investing in a real estate crowdfunding platform, or in a REIT, which is also called a real estate investment trust, or buying and potentially renting out a piece of land. Some of these investment methods, for example, require a minimum investment of a few $1,000s, like when investing in a real estate crowdfunding platform, with the ability to find lower minimum requirements, while investing in an ETF could cost a lot less than that, with also an ability to earn dividends on that investment. Even buying an acre of land, or half an acre, could be a potential way to diversify any investment portfolio. Moreover, there is also the possibility of buying cattle such as a cow for an average of $2,000, or even egg-laying hens for as little as $50, and having them on a farm. In this way, one can have the opportunity to reduce their monthly food costs and hedge against a potential eggflation scenario in the future, when the Fed gets back to printing more and more money, which is a very likely scenario. So there are many different ways to invest in farmland, and as the economic and geopolitical tensions in the world are rising, together with the sovereign debt issues that the US is facing with many other countries around the world, the need for stable and tangible assets that are necessary for survival and do have a substantial intrinsic value will only increase, and that's where farmland comes. Especially when we are also seeing billionaires and money managers moving more and more towards that, as this asset specifically has stood the test of time, and it remains a viable option for preserving and growing wealth. So that was it for this video. If you enjoyed this one, make sure to leave a thumbs up and to click the subscribe button below. And with that being said, see you in the next one.